Welcome back. You're watching Business Saturday here on CNBC TV 18. On to a special, and that too from Washington, D.C. Finance Minister P. Chidambaram was in the city earlier in the week to attend the IMF World Bank annual meetings and also to woo foreign investors. Hot sell India as an investment destination. Chidambaram was there at the IDFC Investor Conference, where IDFC closed its second infrastructure fund worth around $650 million. Here are the Finance Minister on IDFC's infra bond and also the Indian government's push as far as the infrastructure sector goes.
When IDFC was established by the Government of India to lead private investment flows into Indian infrastructure, it was not then and it is not now a government company. I'm glad to note that IDFC has proved to be a successful initiative and has over the years become one of the key flag bearers of enabling infrastructure development in India. IDFC is India's leading integrated infrastructure finance player, providing end-to-end infrastructure financing and project implementation services. I congratulate IDFC on successfully conveying the robustness of the Indian infrastructure investment opportunity to foreign institutional investors gathered here and elsewhere. They have committed $650 million towards first close of its second India Infrastructure Fund, and I'm quite confident they will shortly achieve the target size of $1 billion. This happens to be the second of the India infrastructure funds that was encouraged by the Government of India in 2008 through a direct commitment of $25 million. I'm confident that IDFC will prove to be a worthy infrastructure fund manager and will help you access the Indian infrastructure investment opportunity to realize attractive returns. I'm happy to share with you that the focus of the Indian economy has been on infrastructure investment, which has grown massively, supported by increased private sector participation. Total investment requirements for power, roads, ports, civil aviation, etc. during the 12th plan period, that is 2012 to 2017, was projected at $1 trillion, nearly half of which is expected to come from the private sector. This provides an ample opportunity for foreign investments to reap benefits from the high returns from India. There's a huge opportunity for foreign investment. We have massive infrastructure projects underway. Let me give you one example. The Delhi-Mumbai Industrial Corridor entails an investment of over $90 billion. It will link Delhi to Mumbai's ports. It will cover an overall length of 1,483 kilometers and pass through 6 states of India. It will have 9 mega industrial zones of about 200 to 250 square kilometers each. There will be high-speed freight lines, 3 ports, 6 airports, a 6-lane intersection-free expressway connecting the country's political and financial capitals, and a 4,000 megawatt power plant, and provide a plug-and-play environment for manufacturing investment. The Government of India is promoting public-private partnerships as an effective tool for bringing private sector efficiencies for delivery of quality public services. India, in recent years, has emerged as one of the leading PPP markets in the world because of several policy and institutional initiatives taken by the government. We have over 1,000 PPP projects in the infrastructure sector with a total project cost of about US dollars 97 billion. The viability gap funding scheme has been further strengthened by adding many new sectors like modern storage, education, health, and irrigation. 13 new subsectors have been included in the list of sectors eligible for VGF support under the scheme. We have taken steps to make India more attractive for foreign direct investment. FDI limits have been increased in several sectors, including retail, civil aviation, and telecom, and restrictions on the banking sector have been eased. FDI up to 100% is allowed under the automatic route in most of the sectors or activities. Investors are only required to notify and file documents at the regional office of the Reserve Bank of India. As Ambassador Rao mentioned, a few months ago, the government set up the Cabinet Committee on Investments with the Prime Minister as the chairman to expedite decisions on approvals or clearances for implementation of projects. This has improved the investment environment by bringing transparency, efficiency, and accountability in the grant of various approvals and sanctions. Through policy interventions and tax incentives, we've encouraged infrastructure development funds. This is an innovative attempt to address the issue of securing long-term debt from foreign investors for infrastructure projects. Potential investors in these will be overseas high net worth individuals and institutional investors like sovereign wealth funds, insurance, and pension funds. The income of infrastructure debt funds is exempt from income tax. Withholding tax on interest payments on borrowings of IDFs stands reduced from 20% to 5%. So far, we have 2 IDFs in the NBFC format and 4 IDFs as mutual funds. These have been approved. I'm confident that India will see a long spell of high, sustained growth, which offers opportunities for investment and engagement in various fields. I'm delighted that 2 of the world's most discerning investors, the CDC and the CDPQ, which aggregates savings in the Quebec province, 2 of the world's most discerning investors have decided to invest in the IDFC fund. I'm sure it will open the way for more investors to see the great opportunities that investing in India provides. I wish this fund success, and I have no doubt they will pay handsome returns to their investors and grow from strength to strength.
Finance Minister in Washington, D.C. talking about how India has a FDI-friendly regime, how, they can all do business here and just have to fill out a couple of documents. Also talking about the big push that's been given to infrastructure. On that note, we're going to take another break. On the other side, we'll bring you a special interaction with MK Sinha, the Managing Partner and CEO of IDFC Alternatives. Welcome back. You're watching Business Saturday here on CNBC TV 18. Before the break, we were telling you about the new infra fund that has been set up by IDFC for $650 million. CNBC TV 18's Gopakumar caught up with MK Sinha, the man behind IDFC's infra fund, and started by asking him about the challenges that were faced by IDFC in closing that second fund.
I wouldn't say it was easy. But there's always an opportunity, and right now the opportunity is the massive deleveraging that's happening in the Indian infrastructure market. That's the story that we conveyed. Fortunately, we have a first fund. We did have a track record to speak of, and most of our investors in second fund are really re-ups from our first fund. So that made it a little easier, our track record and our story.
How was the second fund different from the first fund?
It is same in the mandate, as in it's going to continue to invest in core infrastructure, but in the strategy it's going to be a little different, because right now we're going to be investing in existing operating assets that stressed infrastructure developers are going to be shedding to correct their over-leveraged position. So I think the strategy is a little different from the first fund. In the first fund, we did invest in greenfield construction projects. We're going to stay away from that, at least in the initial couple of years. In the second fund, potentially things will get ironed out in the next 2 years, and then we'll come back to investing in greenfield construction infrastructure. But right now, we're going to be buying existing operating assets from stressed developers. So our mantra is good assets from stressed developers.
Have you already identified these operating assets? And it's a big news because you are buying into operating assets which could be potentially facing some difficulties at this point in time. So have you really identified any of these assets?
We just recently bought for 74% equity in GMR's road project in South India, Jadcherla in the state of Tamil Nadu. There are similar assets that we are looking at. There's a huge pipeline of these operating assets across the board. So, I think there are opportunities. We've got them identified. Obviously, I can't be talking about them in public.
How much of the problems, infrastructure problems back home is because of financing difficulties, and how much is it because of the policy paralysis? Because we keep hearing more about policy paralysis issues. So considering that now the fund has been launched, do you think that this could really solve the infrastructure challenges back home?
So I don't think financing is a problem. I think the issue is clarity and consistency in policy. There is policy out there. It's just not very clear or consistent. So if the government of India, has clarity and consistency in its policy, a lot more money can come into Indian infrastructure. I think fundamentally Indian infrastructure opportunity is a very robust investment opportunity, and a lot of money, especially of pension funds from the West, are looking to buy into long-term annuity assets, and India provides the largest opportunity to invest in such assets going forward.
But from your conversations with investors, what is the sense that you get? Why is there so much optimism for the long-term growth story of India at this point in time?
Well, you look at the Indian demographics, I don't think we have a choice but to grow. If we do not grow, 50% of our population is under 25 years of age. In the next 10 years, if you don't generate employment for these youngsters, there will be social instability. So I think the investors from the Western world look at that demographics and say that India has no choice but to grow, and so it will grow. For India to grow, infrastructure is the bottleneck, and therefore infrastructure investments have to happen. The government is doing its best in terms of facilitating these investments. Unfortunately, in a multi-party democracy, it has its own challenges of formulating policy that's acceptable to everyone. But if you look at India in 3 to 5 year snapshots, we move in the right direction. And I think investors look back and see that India moves in the right direction in the long term, and therefore that's the reason for their faith in the Indian infrastructure investment story.
But within infrastructure, where do you see the stress? Which sectors do you see the stress? You already spoke about the road projects of GMR. Other than road sector, where else do you see stress at this point in time, and a potentially good acquisition also?
Roads and power are the two largest investment opportunities in Indian infrastructure. Both these sectors have stress. In the power sector, it's relating to, on the fuel side, relating to lack of gas, a problem with coal. We've started importing coal for the first time in the past 3 or 4 years. In the road sector, we've had issues with respect to dispute resolution with the National Highway Authority. Likewise, again, in the power sector, we've had to go through a second round of restructuring of the state electricity boards, which is partially complete. Hopefully, it'll be fully complete. But I just hope that in the next 10 years, we don't see a third round of restructuring. So those are the stress points that we need to address, essentially in the power and the road sector. I think that The port sector is on the mend. There is a recent announcement with respect to tariff for private operators in major ports. So, and the telecom sector is kind of sorting itself out. So things are moving in the right direction. I'm personally very optimistic that, this is going to be a credible investment story.
Well, your target is to raise, to take this fund up to $1 billion. By when do you think you'll be able to complete this, and are you hopeful of that?
We're very confident. I think we will get there by December. We already have soft circles for an incremental $350 million.
IDFC, they're highlighting all the opportunities that exist in the infrastructure sector. With that, we're going to wrap up this edition of Business Saturday. Thanks for watching. Have a great weekend.